Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. In this video, we are going to be discussing the Klinger Oscillator. Okay, the Klinger Oscillator. It is a custom indicator, so you would have to download the indicator if you do not have it already. And after doing that, you would have to add the indicator to your indicators library for the MetaTrader platform. After you have done that, you will have to restart your MetaTrader terminal so that you can be able to load the indicator to your chart. So right now, I'm going to be loading the indicator to the chart, the Klinger Oscillator, or the Klinger Volume Oscillator, KVO for short. Okay, so this is how the Klinger Volume Oscillator or the Klinger Oscillator looks like. All right. Now, this oscillator was developed by Stephen Klinger. Okay, that is the reason why it is named after him. Okay, so it's a unique indicator designed to track long-term trends. All right, it helps you to track long-term trends while detecting short-term changes in market momentum. Now, this oscillator is calculated in 7 precise steps. Okay, it focuses on price turnover to provide actionable insights for traders. All right. Now, basically, how do you use this indicator to trade? Right. That is the main point. You don't have to go into so much details on the way the indicator is constructed and all of that. So basically, what you need to know is how to use the indicator to trade. How do you identify good trading opportunities? How do you know when to buy? How do you know when to sell? And all of that. Basically, watch out for this zero level. This is a very important level on this indicator window. Okay, this zero level demarcates the bullish region from the bearish region. All right, so above the zero level is the bullish region, below the zero level is the bearish region. Watch out for the histogram bars. Right, these histogram bars help to show momentum. Okay, they help to show the momentum in the market. So when you have short bars like this, for example, it shows very weak momentum. It shows that the momentum is weak. All right. So in this case, we can see what happened on the chart. We can see that right from this point all over to this whole level, you can see that the momentum was weak as indicated by the KVO. These levels where the histogram bars were short shows that the momentum was weak. But then when the histogram bars began to get long, when it began to lengthen, you can see that there was an increase in volatility, there was an increase in momentum. So when you want to trade, how to identify buy opportunities are: one, watch out for this KVO line. The KVO line should cross above the zero level. That is one. And then secondly, the histogram bars should flip to the bullish side, because you might have the histogram bars in the bearish region initially. Wait for the histogram bars to flip to the bullish region, and not just that, but wait for the histogram bars to begin to lengthen. At least you can wait for 2 histogram bars to form and make sure that the length of the second histogram bar is long enough. All right, make sure that it is long enough before entering your buy trade. Okay, so in this case, we would have entered our buy trade around here. And then of course, when you want to set your stop loss levels, make reference to the previous swing low. That is for a buy trade. Make reference to the previous swing low. So this would have been a good place to set a stop loss. And then for the take profit, you can target resistance levels, or you can wait for the KVO line to drop below the zero level. So when the KVO line drops below the zero level, you can then exit your buy trade. So we would have exited our buy trade somewhere around here. That would have given us about 200 pips. So that is a good catch. All right. Now, as for a sell example, when the KVO line drops below the zero line, the zero level, when it enters into the bearish territory, and then you have the histogram bars flip into the bearish territory, and at least two histogram bars has formed, and the second is lengthy enough, all right, then you can go ahead and enter a sell. So we would have considered entering a sell around here, stop loss above the previous swing high. Then the take profit can be at support levels, or you wait for the KVO line to cross above the zero level. So we would have exited around here and entered somewhere around here, right? So that would have given us roughly 60 pips. Okay, that's also a good catch. So basically, that is how to make use of this indicator. It's quite an easy indicator to use. All right. You can either use this indicator in a trending market or in a ranging market, but I'm going to recommend a trending market. The reason is that in a trending market, you are going to get lesser false signals, because when you have the crossover happen, you are sure that price will most likely move in that direction. But in a ranging market, you might not always know when the reversal would happen, the reversal within the consolidation zone. Let us see if we can find such example. Okay, for example, we can see that we had a consolidation around here. We had a consolidation around here, right? So if you are making use of this indicator in a consolidation zone, when you have the first thing to even note is that the KVO will be moving along the zero level, most likely to be moving along the zero level. So you won't even know when exactly to buy or to sell, because the signal is going to be confusing. As you can see here, the signal is going to be confusing. So to be on the safer side, it's better to just use this indicator in a trending market so you can get clearer signals. All right. When you are making use of this indicator, ensure that you observe good risk management. Do not trade with an amount you can't afford to lose, and make sure that you limit your lot sizes. All right. When you want to enter a trade, make sure you calculate your lot sizes properly, and do not risk more than 2% of your capital in one trade, and ensure to use good risk to reward ratios. A very good example is a risk to reward of 1 to 2. All right. So if you are risking $1, your target should be at least $2, your profit target. So basically, that is it. In order for you to have a successful journey, you have to observe good risk management. Okay, it is a necessity. It's very important. All right. So that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching, and I hope to see you in the next video.